So then you've got to kind of look at the mortgage realities right now, and those are kind of interesting. We've got on this screen here, just going to pull up indicating the mortgage rates are in 6.5, 6.6 range. I will call that more the median numbers. Again, if you look at our rate grid every day, we're a little bit better than that here at Mortgage Works. And by the way, those rates that we see that we post on our website, those are 0 point rates. There's no points involved with any of the rates that we post on our rate grid. So keep that in mind, because sometimes when you see lower rates out there, whether it's online or on TV or what have you, you read the fine print, then you find out, oh, it's not a 0 point rate. It's got it's a rate that they're going to make you pay a point or 2 points, something like that. In our case, we always post 0 point rates, and you can see from looking at our rate grid, we are almost consistently always better than what you hear on the news media as to where conforming conventional rates are. So we are one of the lowest originators out there in terms of the kind of rates we can offer. And by the way, we charge no fees. We never have. We don't have underwriting fees, document fees, processing fees, nothing like that. That's not something we've ever done, and we will never do that to our customer. We get paid by the lender, not by the borrower, and we're not going to charge any other miscellaneous so-called junk fees as a lot of lenders do. So again, back to that mortgage reality right now, given the Fed's balancing act of trying to improve the rates, the Fed funds rate specifically, to help support the housing market. Again, it's not being too aggressive about that because they don't want to fuel an ever-increasing explosion in the AI tech industry. That's where they're trying to find some balance. Refis. We are starting to see some more refis in this environment. Now, those refis are typically a couple of situations, I should say. One is we have seen some homeowners who are a little bit extended on other debt, consumer debt in particular, or they have some other pending needs, sometimes critical needs for pulling cash out of their property. So the cash out refinance transaction is somewhat evident these days in terms of refi activity. Again, refi activity is still very, very low historically and most specifically and most recently compared to the pandemic period, but refis are kind of trickling back. But it's a very specific type of refi where we're seeing that activity. So it's mostly cash outs. And again, because of either overextension on other types of consumer debt or a pressing need to do something like we don't want to sell our home and give up our 2.5% or 3% rate, because buying another home you have to take a 6.25%, 6.5% rate. But yet on the other end of that concern, we're seeing some homeowners being willing to give up that lower rate to pull a lot of cash out because they want to remodel their house, whether it's the whole house or the kitchen, or redo their backyard, or build an ADU to generate additional income, or get that child who's been living on the couch until they're 34 years old and at least get them in a separate structure on the property. Those kind of things. We are seeing some of that. And by the way, I got to tell you, when rates doubled from the pandemic to now, in particular, like in 2023 and 2024, people were buying homes, they were financing them, they were taking on those higher rates, and in some cases, in fact, several cases, people were doing that and getting rates in the 7s when they bought their home anytime in the last 12 to 24 months. Current rates right now, given our current environment and that conflict we just described with the Fed being challenged with what to do with the Fed funds rate in terms of trying to support housing, but again, avoid an AI tech boom that could be inflationary, rates have moderated and remain stable in a low to mid 6% range. That is an opportunity for homeowners who bought their home in the last 12 to 24 months and have rates that might be 7 plus, 7.5. You've got a refinance opportunity. If you think you don't, shoot, give us a call. Let me show you some numbers. And I think you'll be pleasantly surprised to find that you may actually, in fact, be able to get what we call a rate and term refi done, and be able to get that rate you currently have down probably as much as 1% lower, maybe a little bit more, and that can give you some significant payment relief.